Assalamualaikum warahmatullahi wabarakatuh. My name is Aliya Sofea binti ALIAS. As a new account executive for IJM Corporation Berhad, me and the other members are required to prepare a segment report and also an interim report for the company. So in this video, we divided our presentation into two parts, which is the first part is for preparing a segment reporting according to MFRS A, and for the second part is preparing an interim reporting as according to MFRS 134. In part A, there are four major topics that will be discussed. So let's start our presentations with the company background. IJM Corporation Berhad was established in 1983 as a result of merger of three medium-sized local construction companies, which is IGB Construction Sdn Berhad, Jurutama Sdn Berhad, and Modajaya Sdn Berhad. The name of IJM itself comprises the first initial of the three original company, which is I stand for IGB, J stand for Jurutama, and M stand for Modajaya. IJM Corporation Berhad is an investment holding company and one of the Malaysia's leading conglomerates and is listed on the main market of Bursa Malaysia Securities Berhad. The company involves in the industry of constructions, property developments, manufacturing and acquiring, construction concessions and also plantations. The main headquarters of IJM Corporation Berhad is in Petaling Jaya, Selangor, Malaysia. It usually closes the account at the end of 31st March every year. IJM's regional aspirations have seen it establish a growing presence with the operations spanning 8 countries with a primary focus in Malaysia, India, Middle East and also China. They have a total of 3,800 employees all around the world, and the company have a total asset of 23 billion for the year. The next topic is about management approach. In this topic, we would like to present a 3-point, which is the first one is about factor to consider having a segment reporting, a second is types of segment, and the third is identify the chief of decision making and its responsibility. So I would like to discuss for the point 1, and the other 2 will be discussed by the other executive members. IJM Corporation Berhad involved in the industry of constructions, property developments, manufacturing and acquiring, infrastructure concessions and also plantations. Second one is nature of production process, which refer to how the production and services are provided to the customer. First and foremost, as said earlier, the company involved in the constructions industry. Construction industry is actually a core business of the company. Since its formations, the constructions division has been sculpting the face of Kuala Lumpur and Malaysia. The company always provides the best solutions with the best balance of cost, functions, efficiency, maintainability, and deliver, which help them to stand out. Second is property development. The group's property divisions, led by IJM Land Berhad, has emerged as one of the largest property developers in Malaysia, with a sprawling township, commercial buildings and high-rise condominiums in key growth areas throughout the country. For example, the company has developed a project in Bandar Rimbayu and make a development in the light waterfront. Kelugu Pahang comprises of residential, recreational, entertainment, hospitality, retail and commercial component, all housed in one dynamic hub and many more. Last but not least, for the infrastructure, the efficient and convenient infrastructure of those highways are essential to complement any government's effort to improve its country infrastructure development. The next factor is types or class of customer. It is based on the level of income, which is more to high level of income because the main productions is involved in a big cost to start. So, and it is also based on the geographic segmentation, which is in different countries or state, and also based on the interest, which is refer to the customer to choose a variety of productions or services. For example, such like constructions or property developments, infrastructure or any plantations.
Assalamualaikum, I'm RAHMAN. Now, moving on, the company has two types of operating segments. They are business segments and geographical segments. The company business segment has 6 divisions. The first segment is the construction division. This division mainly carry out construction activities. For property development division is more on the development of land into vacant lots, residential, commercial or and industrial buildings. Moreover, the manufacturing and crane division is more for the production and sales of concrete products and crane activities. The fourth division is the plantation division. This division is focusing on the cultivation of oil palms, mining of fresh fruit bunches, and trade of crude palm oil. Furthermore, the infrastructure division is assigned for tollway and port operations. Finally, the company also has other operations as the division, which is mainly investment holdings. This is a segmental reporting prepared by the company. Based on this report that were presented in the IJM CORPORATION BERHAD and Report 2020, we can identify the division of the business segments. There are three pages as the company wanted to show the business segments from three different perspectives: the revenue, result of profit, and the asset of the company. This information is important for identifying the reportable segments, which will be explained later on. Next is the geographical segments. This is the geographical segments prepared by the company, which has been categorized into revenue from external customers and non-current assets. These are the geographical items in 2020: Malaysia, India, Indonesia, the United Kingdom, and other countries. This is the summary of the geographical segments report. Next is the shift of decision making, CODM. There is at least one chief operating decision maker assigned to each division. Ong Tan Cheng is the managing director for the construction division, Edward Chong Sin Kiat, the chief financial officer and managing director of the property development division, Tan Bong Ling, the managing director of the manufacturing and clearing. For the plantation division, there is Joseph Tat Cho Yi, the chief executive officer and the managing director, and Purushothaman Kurmaran, the chief financial officer and executive director. For infrastructure division, we have Mazin bin Hussein and Wan Sawani binti Wan Yusof, both have chief operating officer title. Finally, Cyrus Edwards Darwala and Purushothaman Kumaran are the CODM for other operations division. They have country head and chief executive officer titles respectively. Generally, the responsibility of the CODM is allocating resources to the operating segments and evaluating their performance. Moreover, making strategic decisions about the entity segments.
Hi, Assalamualaikum. My name is SITI NAJWA binti AMRAN, and I will talk about the next part, which is advantage and disadvantage of segment reporting. Transparency is a major advantage of segment reporting. Segment reporting can disclose which sectors are money-making and which are not money-making for the company that operates in several categories. If segment reporting reveals that one of the categories is more profitable than other categories, it may induce a strategic shift. It prevents management from canceling unprofitable businesses if performed correctly. Besides that, it is widely recognized that segment reporting is extremely important in investment and credit decisions. It allows users of financial statements to better understand the uncertainty around the timing and quantity of expected cash flows. Creditors are primarily concerned with a debtor company's profitability and cash flow when making loan choice, considering that profits serve as a source of income for repaying the loans. The banker seeks to forecast short-period cash flow as a measure of a company's capacity to satisfy maturing financial obligations when making short-term loan choices. And the last one is, if the data is presented in a true management's eye format, segment reporting offers itself to data manipulation. This offers firm executives more flexibility in deciding how segments are built and what indicators are provided. Managers may combine organizations with various business concepts together. It can also pick and choose metrics to send the right message to the right people. To create a better image of performance, losses in any related business segment could be grouped with losses in unrelated profitable business segment. Disadvantages. Allocation problem is one of the disadvantages of segment reporting. In a business context where more than one product is assigned, there will very certainly be costs that are shared by two or more products. General administrative costs, legal costs, and taxes are examples of joint costs. When it comes to segment reporting, allocating these shared expenditures becomes a difficult task. For example, property tax. If the sectors share a building, the tax or the expenses of the building are shared by all sectors. If the sectors of a business use the same facility, the segment reports property reporting for each sector may be unnecessary. However, some common costs can be allocated on a rational basis, such as electricity power can be apportioned on the basis of light points. This could be time-consuming and difficult to define how each sector is performing, especially if the sector shares resources or money. The second one is problem of misinterpretation. In the event that inter-segment sales transfers are included, if segment sales figures are higher than consolidated sales figures, it leads to misinterpretation by user groups. Aside from the overall sales, there's also the issue of calculating segment costs. Nonetheless, finding the traceable cost of a segment is quite simple, yet the true challenge emerged when determining the share of segment costs incurred from a common cost incurred by two or more segments. Last but not least, difficulty in providing data. Measurement issues have made it tough to provide when doing segment reporting. The difficulty of determining segment information should be considered since the measurement problem affects the possibility of disclosing specific information. When we look at the profit and the loss account statement, we notice that the sales figures, particularly inter-segment sales, are problematic.
Assalamualaikum. My name is AMRINA BINTI ALIAH and I am third presenter. Today I'm going to explain the process to identify the reportable segment and non-reportable segment. The process can be broken down into 6 main steps. Firstly, identify all operating segments. Second, evaluate operating segment for aggregation. Third, apply the quantitative threshold test 10% test. 4. Evaluate operating segment for aggregation again. 5. Apply the 75% test. Lastly, aggregate the remaining operating segment into the all other categories. First, before you can accurately identify operating segment, you must first determine who is acting as CODM, which already have been provided by the previous presenter. After that, we can begin to identify operating segment based on how information is organized by the CODM. Based on your report of IJM CORPORATION BERHAD, operating segment are construction, property development, manufacturing and quarrying, plantation, infrastructure, investment, and others. In second step, if a particular product or service of entity is significant and constitutes as an identifiable business in which the entity operates, then it will be reported as a separate operating segment. However, not all segments need to be separately reported. Our operating segments are only required to be reported if they exceed quantitative threshold. 2 or more operating segments may be combined and report as one if a certain conditions are satisfied. In annual report of IJM CORPORATION BERHAD, we can tell that manufacturing and quarrying have been reported as one. Some of you may be thinking, how we identify reportable segments? Right now, we are going to apply 10% test. As long as the segments are at least 10%, then they will be identified as reportable segments. There are 3 types of the thresholds for reportable segment, which are firstly revenue, result and profit, lastly assets. We are going to focus on revenue test. Revenue is the regular income generated from the sale to external customer, and inter-segment sale is 10% or more of combined revenue of all operating segment. The formula is revenue segment divided by total revenue of segment and multiplied with 100. Based on table, we can see that construction, property development, manufacturing and quarrying, and infrastructure have met the criteria of 10% test, which is their percentage are equal to 10% or more. Therefore, they are reportable segment. Meanwhile, remaining 2 segments are less than 10%. Thus, plantation and investment and other are non-reportable segment. In this, you may look at the remaining operating segment that did not qualify under any of 10% test to see if any are economically similar. It can be designated as reportable segment despite its size or combined with other similar segments that are also below the threshold of significance or include as and all other segment categories.
Assalamualaikum. My name is SYAMIMI Aliya. Next, we look at 75% threshold test. After determining the reportable segments, the entity should ensure that the total external revenue attributable to those reportable segments is at least 75% of the entity's total revenue.
When the 75% threshold is not met, the additional reportable segment should be identified even if they do not meet the 10% threshold until at least 75% of the entity's total revenue is included in its reportable segments. Based on the table, the total revenue needs to be deducted with inter-segment revenue and share of operating revenue of associates and joint venture to get the revenue from external customer. Revenue from external customers of reportable segments will be totaled up and divided with total revenue. The result will be 73.88%, which is less than 75% and does not meet the 75% threshold task. If this happens, the additional reportable segment should be identified even if they don't meet the 10% threshold task. Hence, an additional segment, which is plantation, is identified as reportable segment on the basis of the highest external revenues generated among the non-reportable segments. And the result is 83.19%, which is meet the 75% threshold task. The investment and others will remain as non-reportable segments and grouped as all other segments category. Based on this segmental report, the operating segment is separated into two segments, which is reportable segments and non-reportable segments. There are 5 reportable segments, which are construction, property development, manufacturing and quarrying, plantation, and infrastructure, while investment and others will be non-reportable segments. All these computations are based on the annual reports of IJM Corporation Berhad.
There are two bases of preparation of the interim report, which are integral method and discrete method. Under the integral method, interim period is treated as an integral element of the annual accounting period. As a result, based on management's best predictions, annual expenses that may not happen precisely during an interim period are incurred throughout all interim periods. This increased accrual usage will certainly result in a slew of accrual adjustments in subsequent periods to correct any previous estimation errors. It also recommends using the expected annual tax rate for all interim periods, because if the corporation is subject to graduated tax rates, the annual tax rate may differ significantly from the rate in effect during the interim period. Under discrete method, each interim period is treated as separate reporting period, and as such is not related to expenses incurred during other interim periods of the reporting year. As a result, an expense that benefits more than one interim period will be fully recognized in the period in which it is incurred instead of spread out across numerous periods.
Two accounting policies that IJM Corporation Berhad used in preparing the interim report. First is MFRS 116, Property, Plant and Equipment. Under MFRS 116, all property, plant and equipment are stated at cost less accumulated depreciation and accumulated impairment, except for freehold land and capital work in progress, which are not depreciated. Freehold land is not depreciated as it has an infinite life. Depreciation on capital work in progress commences when the assets are ready for their intended use. The cost of an item of property, plant and equipment initially recognized includes its purchase price and any cost that is directly attributable to bring the asset to the location and condition necessary for it to be capable of operating in the manner intended by management. Second is MFRS 140, which is investment property. Under MFRS 140, investment properties comprising principally land and buildings are held for long-term rental yields or for capital appreciation or both and are not occupied by the group. Investment property is measured initially at its cost, including related transactions and borrowing costs, if the investment property meets the definition of a qualifying asset. After initial recognition, investment property is stated at cost less accumulated depreciation and accumulated impairment, except for freehold land and capital work in progress, which are not depreciated.
Next is type of interim reports. There are 7 types of interim reports prepared by the company in compliance with the MFRS 134. The first one is condensed consolidated statement of comprehensive income. Next is condensed consolidated statement of financial position. Condensed consolidated statement of changes in equity and condensed consolidated statement of cash flow. Please note that all of these financial statements are unaudited. Finally is the explanatory notes. Here are the 14 items listed in the explanatory notes.
Hello again, I am AMRINA. Right now, we are going to identify brief for the current and cooperative of IJM Corporation Berhad. First, we go to condensed statement of comprehensive income. In individual quarter, current year quarter, 31st March 2020 will be compared with the preceding year quarter 31st March 2019. For cumulative period, the current year to the date 31st March 2020 will be compared to the preceding year to date 31st March 2019. Next is condensed consolidated statement of financial position. The current interim report is 31st March 2020 will be comparative to the date 31st March 2019. After that is condensed consolidated statement of change in equity. The current interim report is 31st March 2020 will be comparative to the date 31st March 2019. Lastly, condensed consolidated statement of cash flow. The current interim report is 12 months ended 31st March 2020 will be comparative to the date 12th month ended 31st March 2019.
Lastly, we are required to propose any 2 adjustments to be included in the interim report and prepare and extract any one of the financial statement to show the effect before and after adjustment. So, we decided to make an adjustment in the statement of financial position, which is relating to inventories, and statement to the cash flow, which is related to acquiring of new land. For the first adjustment, as stated before, IJM Corporation Berhad financial year end is on 31st March every year. During quarter 4, before the adjustment, the cost of inventory that the company have is amounted 7,687,014,000 ringgit Malaysia as at 31st March 2020. However, the net realizable value was 7,500,000,000 as at 31st March 2020. According to MFRS 102, inventory are to be measured at the lower of cost and net realizable value. So, after the adjustment as at 31st March 2020, the inventory is amounted 7,500,000,000 and shall be recognized as in net realizable value because the amount is lower than the value of cost. So, the difference between the cost and net realizable value amounting 178,014,000 can be recognized as loss of inventory and shall be recognized in the statements of profit or loss. For the second adjustment, in 3rd February 2020, the company has purchased a new land amounting 2,300,000 in cash. Before the adjustment, the cash and cash equivalent at the end of financial year as at 31st March is 2,071,029,000. After the adjustment, which is we made a purchasing of land, the net cash flow from the investing activity has increased to 824,273,000. As a result, the new cash and cash equivalent at the end of the financial year as at 31st March is amounted to 2,068,909,000 ringgit Malaysia. So, that's all from us. Thank you.